This is Alpha. Let's continue our conversation from last time. The unknown field of stock technical analysis, how a top trading strategy was born. Next, I will demonstrate the whole process of the birth of a top trading strategy. This is a trading strategy born from the chord relationship between market notes, so it is called chord trading strategy. The universe is a symphony of natural laws and all things. Everything in the world operates according to the basic laws of nature, and nothing can escape this rule. Whether it is flowers or plants or human affairs, there is some inherent and indescribable connection between all things in this world. Tchaikovsky once said, "Music is the greatest gift from God to mankind. Only music can express peace and tranquility." Music, as a form of expression that transcends language, is not only a crystallization of art, but also an auditory embodiment of the laws of nature. The relationship between notes, especially their harmony, can touch people's hearts and guide our perception. If we turn this perspective of natural harmony to the seemingly chaotic stock market, what do we find? Trading is like a concert. If you think of prices as musical notes on a candlestick chart, the stock turnover rate, an indicator of trading activity and market participants' resonance, is like the vibration frequency of a musical note. It can show a certain rhythm of harmony or dissonance, thus revealing market trends. On this basis, a trading strategy based on interval chord analysis is proposed. Before introducing the chord trading strategy, let's first learn some simple music theory knowledge. The beauty of music comes from the relationship between notes, and the essence of this relationship is the mathematical ratio of the frequency of sound vibration. An interval, the distance between two notes, is defined by its frequency ratio. For example, big third relationship. Do and mi, the frequency ratio is 5:4. Doesn't this sound warm and bright? Pure fifth relationship. Do and sol, the frequency ratio is 3:2. Can you feel some stability and harmony? These combinations, called consonant intervals, are pleasing to the ear because of their simple frequency ratios, like echoes from nature. On the contrary, dissonant intervals. For example, the relationship between minor second, mi and fa, the frequency ratio is 16:15. Feeling a little anxious? The two notes are tense because of the complex ratio between their frequencies and need to be resolved into harmony. This harmony not only affects the auditory experience, but also guides people's emotions and expectations. A consonant sequence of notes gives a sense of direction, whereas a dissonant sequence is disorienting. Do you feel it? Isn't it amazing? Pythagoras said that everything is number. And the harmony between notes can also be judged by the ratio of vibration frequencies. The following is a table of the ratios of vibration frequencies between scales under different laws. It needs to be explained that the values in the table are a proportional relationship, not an absolute value. For example, if the frequency of the do sound is 1, then re is 1.12, mi is 1.25, and so on. From the harmonious relationship between the notes just now, we know that the major third and the perfect fifth are harmonious. So the ratio of mi to do is exactly 1.25, they are harmonious, while re and do are not harmonious. From the table above, we can see that the differences between the different laws are actually very small. But in order to be more accurate, we still use the most popular 12-tone equal temperament for U.S. stock trading. After all, some milk powders are more suitable for the constitution of Oriental babies, and the 12 equal temperaments should also be more suitable for the rhythm of U.S. stocks. For A-share traders, choosing the 3-point profit and loss rule may be more effective. The power of music lies in its universality. It is not only a product of human culture, but also a part of natural law. The vibration frequency of the notes echoes the harmonic resonance in physics, and this sense of harmony is a microcosm of the order of the universe. So can this kind of order be found in the stock market? Stock markets may seem chaotic, but they are driven by both human behavior and the laws of nature. Turnover rate, which is the ratio of stock trading volume to circulating shares in a certain period of time, is a direct reflection of market sentiment. High turnover rates can indicate enthusiasm or panic selling, while low turnover rates can indicate calm or quiet. Assuming that we regard the turnover rate for 3 consecutive days as a sequence of notes, can we extract from it a consonant relationship similar to that in music? For example, the turnover rates for 3 consecutive days are 1%, 1.2%, and 1.5% respectively. Can these 3 numbers be regarded as the vibration frequencies of 3 notes? These 3 notes can form a chord. What we need to do is to determine whether this chord is a consonant chord or a dissonant chord. This will reveal whether the market's voice is consistent, whether the trend is clear, whether the resonance of market participants is high or low, and whether the trend is clear. To simplify the analysis, we use the 12-tone equal temperament. The turnover rate is directly regarded as the vibration frequency of the note, and the frequency ratio is used to verify whether it forms a harmonious, major triad, like this. Doesn't it sound comfortable? This chord contains 3 notes, do, mi, and so, which are called the root third and fifth notes respectively. The major triad is the most common consonant chord in music. Any 2 of these 3 notes are consonant, and their frequency ratio under the 12-tone equal temperament is as follows. The root note to the third note do, mi, they are a major third relationship, and the frequency ratio is about 1.26. The third note to the fifth note mi, sol, they are a minor third relationship, the frequency ratio is about 1.19. The root note to the fifth note do, sol, they are in a perfect fifth relationship, and the frequency ratio is about 1.50. Okay, now let's incorporate music into the transaction. The turnover rate R1, R2, and R3 of a stock for 3 consecutive days are regarded as the frequency of do, mi, and sol. Calculate their pairwise ratios to see if they meet the frequency ratio requirements of the major triad. We know that there are no 2 leaves in the world that are exactly the same. The trading conditions of the strategy should also have a range. We will temporarily control their error within 15%. If these ratios are within this error range, they fit the frequency ratios of the major triad. It is believed that the turnover rate sequence forms a harmonious chord and the market trend is clear. Otherwise, it is considered discordant, the trend is unclear, traders have low resonance, and there is risk. Let's take an example. Suppose a stock has a turnover rate of 1%, 1.2%, and 1.5% for 3 consecutive days. Let's verify whether it can form a major triad. The first step is to calculate the frequency ratio. R2 to R1 is 1.2, R3 to R2 is 1.25, R3 to R1 is 1.5. In the second step, let's determine the harmony. Compare the frequency ratio just obtained with the ratio of the major triad. If the error range is within 15%, it is acceptable. We can see that the maximum error is about 5.1%, and all ratios are within the error range of plus or minus 15%, which is highly consistent with the consonance characteristics of the major triad. It indicates that the market trend is clear and the resonance among market participants is obvious, which is suitable for buying or holding. Based on the verification of 12-tone equal temperament and major triad, we propose the trading strategy of chord trading strategy. It is both concise and suitable for quantification. The fluctuation of stock prices is like the ups and downs of music, and the turnover rate reflects the vibration frequency of market sentiment. When prices continue to rise, the concordant major triad of turnover rate shows a bright and firm emotional color, indicating the continuation of market trend. However, when the price rise slows down or turns to decline, chords with a high turnover rate often lose their harmony, and their emotional color becomes weak or chaotic, as if there are harsh dissonances in the music. This change indicates that the market momentum is weakening and traders should sell in time to avoid risks. Therefore, to be on the safe side, we need the turnover rate of transactions to maintain an upward trend to avoid possible reversal risks. Our specific trading rules are as follows. When the turnover rates are R2 and R3 for 3 consecutive days meet the major triad frequency ratio, and the error range is within 15%. This indicates that the market trend is clear, so we buy. In fact, we found that there are 3 values in this strategy, R1, R2, and R3. When R1 is used as the numerator, the relationship between the 3 values can be controlled by controlling the ratio of R2 to R1 and the ratio of R3 to R1. We call this the major triad relationship. Therefore, we simplify the conditions as follows. Condition 1. R2 is between 1.1099 and 1.4099 compared to R1. Condition 2. R3 is between 1.348 and 1.648 compared to R1. We call this the major triad relationship. Holding conditions. During the holding period, check every day whether the ratio of the turnover rate of the latest day to the turnover rate of the previous day still meets the harmony condition between adjacent notes in the major triad. That is, the ratio of R2 to R1 or R3 to R2. That is, the turnover rate of the latest day divided by the turnover rate of the previous day is between 1.039 and 1.409. We call this the major triad holding condition. If the chord remains harmonious, it means that the market trend is still strong and the price continues to be high like the music, so you should continue to hold. If the chord turns dissonant, it reveals that the resonance of market participants is low and the signal is confusing. It indicates that the trend may reverse and you should sell to avoid risks. Through the perspective of the 12 equal temperament and major triads, stock turnover rate is endowed with the soul of music. The harmonious turnover rate sequence is like a moving chord, indicating the harmony of the market and the clarity of the trend. The dissonant sequence suggests chaos and risk. The interval concord analysis method connects the laws of nature with market behavior through concise mathematical logic, providing investors with a poetic trading guide. Although the market is unpredictable, this symphony of the market is undoubtedly worth listening to. Seize opportunities in harmony and avoid risks in disharmony. Our strategy is ready, and we will put it into practice to test it. Okay, let's stop here for now. We will continue next time.